Hello and a very warm welcome to everybody. I am Shrija Agrawal and with me are two very interesting guests today. With me is Alain Carrier, who is the Head of International Investment at CPPIB, and also joining me is Vikram Gandhi, who's Senior Advisor to CPPIB. Gentlemen, thank you for talking to us. Alain, I would first like to begin it from you that this is not necessarily your first trip to India, but tell us more about what brings you here.
We think India long term is going to be a great destination for our capital. We have about 8.2 billion Canadian dollars in India today. It's a little above 2% of the fund, so small percentage-wise. But we think the growth trajectory of our exposure to India should be very important.
How you do a SWOT analysis for India as an investment opportunity for you?
From a strength and opportunity perspective, the underlying strength of the Indian consumer, ultimately everything gets to that is the spending power of the consumer. And what we see has changed quite a bit even in the last 5 years is that two things. One is that the average GDP per capita of the Indian consumer is about $2,000 now, and there's a lot of analysis which suggests that when countries reach that stage, the actual growth from that point onwards is pretty exponential. Second is that the access to information, the access to data, the access, the proliferation of mobile technology really again lends itself to the consumer market. So I think from a strengths perspective, that's clearly a big plus. I'd also say a lot of the initiatives that have been put in place from a deregulation or regulatory standpoint are also positive. What we haven't seen is the result of those, because these are, whether you look at the bankruptcy code or the introduction of GST and some of the other policies, that they hopefully over a period of time will result in a more efficient economy. But again, those things take time. Threats or weaknesses,
yeah.
if you will. From our perspective, the basis of still the ease of doing business in India, the smoothness with which things happen, there's still a lot of friction cost. And so from that perspective, I think, and I know there's a big aspiration to improve that.
So tell me one thing, what are the kind of deals that you would like to see in India? What you would like to do in India and you're not being able to do here?
Well, I think for us, as we look at the India strategy or in some of the other emerging markets as well, is that there are three things which are critical. One is to really find the right partners. So if you look at all the things we've done, it's never typically been where we just go and do something on our own. So having the right partners and a strategy that deals with the right partners is the first piece. Second is on valuations. And, again, we are a sophisticated institutional investor and are very, very disciplined about risk return and reward. So,
do you think it's high right now?
I won't say it's necessarily high right now. There are a lot of assets which could be interesting. There are others which probably are not. So it's very hard to generalize that. So I think that's, in terms of where we are looking, I think we can do a lot more in the areas that we're already in terms of infrastructure, in terms of real estate, in terms of private equity. We're developing a strategy around public debt, private debt.
And you're going to talk about the private debt strategy a little more?
Well, I wouldn't say it's different from other funds globally, but we have quite a flexible private debt approach. Being basically across the capital structure from senior to mezzanine. We'll take primary positions in companies. We'll take secondary positions in the market. And so we'll look at senior loans. We'll even look at setting up vehicles that will invest on our behalf, and it will be tailored to the market opportunities.
For an annuity-seeking fund like yours, one sort of gets an impression that you'd invest in infrastructure and some of those traditional assets. But you invested in a company like Byju's, right?
We invest across the entire risk spectrum. We cover every single asset class. So we think actually diversification is a great way to generate alpha and manage risk at the same time. Diversify aggressively across asset classes and across geographies.
So there is a review happening and you are looking at the bankruptcy code more carefully. Tell us about 3 or 4 significant takeaways that you've had from looking at this more meaningfully.
Well, we're in the process of doing it now, so
we've not reached any conclusion. I would be happy to share, but it's an asset class which we don't have much exposure to in India, and it's something that we think the opportunity should be there. But like in all these other things too, when we did our first infrastructure deal or real estate deal, we spent even before we made our investment, for example, in Kotak Bank, we spent 6 to 12 months doing a lot of market research, understanding the opportunity, etc. And only then did we do something.
And the one thing I would add, it's also very relevant. We're global allocators of capital. So an investment, we don't have a hard allocation into any market. So any strategy in any given market has to be on a relative basis attractive versus everything else we can find around the world.
We had a very successful REIT offering, in India, just real estate investment trust offering.
Mm-hmm.
Any sort of sense there that, CPPIB, as a deep institutional investor, would like to partake in some of those transactions?
Yes, I think it's for us, as you know, we set up the first private InvIT on the roadside. We've been quite encouraging of SEBI and the various other policymakers and in interacting and helping them think through all this. So for us, the fact that now we have a REIT, we have an InvIT, we've got some interesting structures in place, and clearly we feel that that's an area that we probably will participate in, again, for the right transactions and the right pricing.
So you are reviewing that meaningfully?
Yes.
Okay. And I also want to understand more about this entire, era of super abundant capital, where private capital providers are becoming bigger and bigger. We just saw this entire big merger of Oaktree and Brookfield.
So I think there's something we've had to deal with for a few years now in most of our asset classes. Having capital by itself is not enough a differentiator. So you need to bring other tools to the equation. Long-term focus, sophisticated team of underwriters. The partnership angle is going to be a differentiator as well. So all these elements have to be together to make it a unique opportunity for CPPIB.
No, but the fact that there's so many, sponsors merging with each other, what is driving that, you think? Consolidation in the industry?
I can't speak for themselves, but I think these platforms that look to manage large pools of capital from a fee basis, the more capital you manage, the more of an ongoing fee stream you can generate, and that your public market valuation will be driven by that. And that gives you more heft and firepower in the market.
Asset management firms and other firms, there's a big economy of scale.
Mm-hmm.
So I think part of the Brookfield Oaktree is that.
We are seeing an evolved sense of deal making in this country. The quantum of friendliness in transactions seem to be coming down, and it has been triggered by the bankruptcy code, where the pursuit of ambition is so high. What role does CPPIB, such a huge capital provider, see itself in some of these transactions? I mean, we are going through very interesting IT mergers also right now. So any sort of comments or thought processes there?
But I think when I look at M&A, which is what you're saying, the fact that more and more of this is happening in India, I think is a very positive thing in my view, because it's actually, basically resulting in the markets, the market, as I say, the market for capital acquisition, or the market for acquisition is developing, which historically has not been that active because of regulation, because of concentrated ownerships, et cetera, so all the reasons. So the fact that it's happening is great. And for us, we are a provider of capital, we're an investor. So in the context of any of those transactions, if there is an interesting investment opportunity for us, which gives us that risk on return parameters, and again, getting back to the partnership models.
We have Jet Airways being grounded, I'm just saying, supposedly.
I heard. My VA fund was very full of these.
Would CPPIB be interested in some of these transactions? Of course, partnering with someone.
I'll never say never about anything, but I seriously doubt that we'd be interested in taking over an airline.
The first thing that comes to your mind when I say the following: corporate governance standards in India.
Evolving.
Interesting. Valuation in India right now?
I don't think I have a word for that.
Canadians at the gate.
Welcome.
Okay, Vikram, if you were to give a message to the finance minister of this country, what would that really be?
Oh, I don't think we have the message. We're not in the business of CPPIB, is not in the business of advising the finance ministry of India. Sorry. Ultimately, the capital creation in India is not anywhere close to what it needs to be to support the growth and the growth opportunities that India has. And so therefore, having a proper strategic perspective on foreign capital and foreign investment is important, which I think the government clearly recognizes. But I think that should continue to be a priority for the government.
Thank you, gentlemen. Thank you for sort of speaking with me on that note to wrap up from my side.